Welcome to the May Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, April ended with the equity markets up for the fourth month in a row, and many are expecting the spring slowdown to come next when the markets give back some of those gains. Are you expecting this to happen for us, and if so, what will be contributing to it?
April was a great month in the markets, Maria, and we're at all-time highs once again. And the question really is, can that continue? And frankly, I have my doubts. A couple of reasons for that. First of all, the real economy has indeed started a spring slowdown again. We've seen some very disappointing results in durable goods and retail sales that suggest that things are indeed slowing down in the real economy. And what depends in the markets really is how they're going to react to that and if it continues. I personally believe we're going to continue to grow, but at a slower rate. And to the extent that the markets are expecting faster growth, that's something that could be a problem. We're also seeing corporate revenues start to slow down and even potentially roll over. And if that's the case, that could also potentially mean a slowdown as well.
The famed Blue Angels and Thunderbirds have been grounded by the sequester, although air traffic controllers received a reprieve from the budget crisis. Have the markets sort of baked in an expectation that the sequester cuts will be what they are?
I think the markets have baked it in. The markets expect spending cuts to continue. They expect actually further spending cuts because this is something that has to happen. I would also note that many of the spending cuts that have been made, including the ones you mentioned, were actually made specifically to be as visible as possible. To the extent that the agencies have now given it their best shot to get the public to perceive this as a problem, the pressure to rescind the spending cuts will now recede. So I think going forward we're going to continue to see this, and I think any rescissions have already been made.
The European Union seems to be in a period of calm, although several of their countries have very high unemployment rates. What do the next few months hold for the EU, and what's the expected impact on the U.S. equity markets?
The EU is in a very, very strange position right now. Post-Cyprus, everyone seems to have thought that, hey, everything's okay, which is simply not the case. We have seen some real progress, I admit that, in Italy particularly. But at the same time, none of the major issues have been resolved, and in fact, the gap between the spending countries and the paying countries is getting larger. You're seeing France move further and further away from the austerity camp. You're seeing political parties in the paying countries, particularly Germany, getting more and more mobilized against continuing to pay. When that gap gets too wide, that is when potentially the Eurozone could break up. And it continues to widen, and nothing really has been done to address that. So I think it's a false calm. I really do.
North Korean media has been very active over the past month, depicting a rather unpredictable leader at the helm. Do the markets see this as saber rattling, or are they expecting some increased volatility coming around the bend?
I think the markets do see this as saber rattling, and honestly I think they're right. North Korea has been in crisis mode for the past 40 years, probably as long as I've been alive, but somehow they never seem to go over the edge. Now, of course, the potential is always there, but at the same time, they know if they go over the edge, that's it. So I think this is saber rattling, and I think this is just one more thing that the market is correctly, in this case, discounting.
What keeps you up at night, and what helps you to sleep?
The thing that keeps me up at night is the things we don't see coming, or at least the thing the markets don't see coming. I think Europe is a big example of that. The thing that helps me sleep at night is we really are seeing continued progress in the U.S. in the real economy, in progress on the deficit, in progress on employment. It's not as fast as we'd like, but it's there and it's real. So on balance, I think the U.S. is a great place to be, and we're getting there.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.